Hi guys, it's Henry from IFE. So today I want to talk about what to do if the market dips and how to pick funds, as it's a topic that's relevant right now in today's climate, as we've just seen the markets take a bit of a dip recently, and it's been on a year bull run, almost linear since COVID first hit the markets. So firstly, how to look at funds and how to pick funds. I've done a lot of articles, a lot of blogs on my website about this, about how to look at funds. But how do I pick it? Obviously, it does differ for your investment time frame, your risk profile as well. Put a lot of blogs on how to adjust a portfolio for your risk profile accordingly. So feel free to have a look at them. But for anyone looking at the 10-year plus time frame, investing in funds or even stocks, you should look to hold for the long term. So if the market dips, has a 5%, even 7% dip in the markets, you shouldn't be too worried. So a lot of people have gone, it's dipped right now, should I sell, should I buy, what should I do? If you're picking funds properly and you're looking at more the intrinsic value, so we've talked a lot on this about Fundsmith and the fund and the stocks that Terry picks within the fund. It doesn't worry him or a lot of the investors that hold good quality funds or good quality stock if the stock market dips, take a dips, because these are going to happen. It's going to be the natural cycle, boom and bust. If you are looking for more defensive, go for more defensive stock, non-cyclical. If you're looking for more growth, obviously go for more growth technology stocks. You see the growth has a bit more risk element into them. But if you're as an investor, if you're picking funds, if you're picking stocks, look to go for the medium to long term. That's how most fund managers look at stocks when they pick it. So why shouldn't you? So also it gives you that, doesn't give you that urgency to look at your portfolio every day. And I think this for a psychological benefit that you can find yourself. I've done it personally, and no clients that have done it, where they look most days at their portfolio to make sure it's not changed and everything's going accordingly. Now with my personal portfolio that I have now, I personally just leave it there and don't look at it, because I know over the long term it will grow unless something catastrophic happens. So if you are looking to pick stocks, to pick funds, do your research prior, make sure they're the right funds. Go on the Morningstars, go on the TrustNet, read reviews about the fund managers. If it's the stock, look into the stock. Look at the free cash flow, look at the profit margins, know the sector that it's invested in, know what it's got in terms of its competition, why it outperforms its competition, what it's got in the future, what its future outlook is, what its CEO is. If you're looking at funds or ETFs, make sure the region, look at the region, look at the economic data, look at the fund manager if it's an active-based fund. Have they performed? Is it a well-rated fund? That'll give you the kind of sound foundations to know that it's a good fund or stock that you can hold for the long term. So it's a bit of Warren Buffett philosophy. Just go in long term and don't, if it's not a good investment that you don't think you can hold for long term, quite simply don't invest in it. Thanks guys, hope you found this useful. If you do want more content, feel free to go to info@investmentforexperts.